Hi everyone, thanks ever so much for joining me again. Today has been a fantastic day on the markets for gold traders or people trading the gold system. And I think for day traders in general, it's been a very good day. The market's been one directional and it's been a lot easier to trade than it has recently. And you've got to take advantage of days like that. So I hope that you have. Now, I'm going to talk about some basics of trading today. And I'm also going to go into a little bit of an introduction to chart reading. And, you've got a brain. It might sound ridiculous to say that, but you've got a brain, and this brain of yours is very important to you. It's a rescuer and it's a problem solver for you. And it also gets you into trouble if you don't take control of it. And with trading, you need to have a disciplined brain, a disciplined mind to be successful. And people who were disciplined and stuck to their systems today will have done very, very well. And I hope that was you. And if you're just learning to trade, then this sort of stuff is invaluable, Just take a look at what's behind me. What do you see? Maybe some books, maybe the back of a chair, maybe a window over there, things like that. And, how do you know that that is what you are seeing? That might sound a ridiculous question, but I'm being serious. How do you know that these are what you're seeing? You know because you've seen them before, and your brain basically has a strategy for understanding things, for understanding objects, and linking what you're seeing with definitions of objects, and it works out what they mean. So you might have pieced together that what this means is that I'm in my house. And you'd be absolutely right. I am. Now, what has this got to do with trading, you might ask? And that would be a very good question. The thing is with trading is that you need to, as a professional trader and a successful day trader, and also, a hobbyist even, to be successful, you need to be able to look at trading charts and see them like books, like windows, like backs of chairs, like ant, me. You need to be able to look at the charts and know what's happening. And you need experience for that. We're born as children, as babies, we're born with the potential for identifying these things, but we're not, we don't know what a table is when we're born. We don't know what a window is when we're born, or a book. We learn these things, and it's the same with trading. And because you've already got some knowledge in your brain, when you start trading, you might kind of forget that that's how you've got to learn it. And so you need to be able to understand the trading fundamentals. You'll have heard me talk about the 3 C's: context, content, and confluence. These are things that, they're like the front of the book, the spine of the book, the pages in the book, and the back of the book. That's what they are. In order to be a book, it needs to have a beginning and an end, like everything else in life. And that's the same in trading. You need to be able to identify what are the key things that identify what's happening in the market, so that I can work out whether it's in a position for trading long or going short. And that's the key aspect to being successful traders. Of course, you've got to be able to work out where price is going to go in the short-term future. And scalping, ultimately everybody is scalping. We're all scalpers, because on a 1 minute chart, you can take trades that last for a few seconds or a minute or 2 minutes. On a 5-minute chart, likewise, you can take a trade that lasts for a few seconds, a few minutes, 5 minutes, 10 minutes, probably maximum, but you're taking chunks out of the price action. And in order to be successful in doing that, you need to be able to identify what's happened, what's happening right now, and that will lead to the story of probability about what's going to happen next. So let's have a look at the charts and see what did actually happen today. It's been good. So we're having a look first of all at the DAX, and this is what happened this morning. A big downtrend, and I think you'll all know what a trend is, so that's good news. And do you know how to trade a trend? And do you know what precedes a trend? And do you know what follows a trend? Do you know the different stages in a trend? These are the type of things that you need to know. So you can see here that the market was in a bit of a trading range to start off with this morning, and then it shot down. Now, I always include value within my charts. That gives it context, gives the trading price action context. So I've got the 8 and the 20 EMAs, and I scalp around these levels. So big downtrends are almost always started by successive red bars, and that's what we had this morning. Successive red bars. The bulls didn't give up. They had a little rally which didn't get past the river of value in here, and the river went down all morning as the price action did as well. And so these successive red bars were bigger than the 4 successive green bars that followed them. And that's also an indicator. When the red bars are bigger than the green bars, you're likely to find that it's going to be followed by some short trading action as it attracts sellers. So this successive series of red bars, it wasn't acted on straight away. Price went back to value. There was an engulfing candlestick you might be able to see here. This is the 5-minute chart, and it was followed by lots more red bars, followed by, this is strong trend, weakening trend, small trading range, followed by continuation. All of that, probably in 20 trades, was tradable. On almost every candlestick was tradable. Maybe not on the 5-minute chart. On a smaller time frame chart, there were lots and lots of trades as the market descended. See it all in here. Lots and lots of visits up to the river of value and lots of rejection down. Obviously, trading can't be and isn't one-sided, and you can expect that when price falls far enough, like it did here, it goes down far enough away from the value levels, then it goes back to value. And then if the retreat back to value has not been as strong as the push away from value, you'll find that it's followed by more of the same. So the same happened here, long way from value down here, went back up to the river of value and rejected down. All of these opportunities, you could have made money with a really good system like the gold system that I operate. You could have made money on all of these following the system rules. And this is on the 5-minute chart. On the 1-minute chart, there are dozens of trades and trading opportunities. And so it was a good morning. So, all good things come to an end, but this didn't come to an end straight away for everybody, because it's been a good afternoon. This is the Dow this afternoon, 5-minute chart, 1-minute chart, and the first couple of hours on the Dow, it was all downwards, and it was bouncing down from the river of value. And this is, this is the front, the back, and the middle of the book. You've got to read the book, and you've got to understand what a book is, how to read, and what it's all about. And it'll, your brain will help you do that. And, you need a good education, and that's what I think I offer. So, all of this stuff might raise questions for you. Do feel free to ask me. I'm a professional trader and I'm a professional teacher, and I'm a coach. That's what I do. I coach people to make better traders so that you lose less and win more, and hopefully turn your trading into a success for yourself. And that's what drives me. And it's been a good day for me. It's been a good day for most day traders. Not every day is like that. Imagine you have a day when it's a bit like this and it goes up and it goes down. There are opportunities in there, and you need to work out that this is what is happening. On this particular day, look at all these legs that are at the bottom, wicks that are at the bottom and at the top. What was happening here was that price was going down and then getting bought, and every time it came down to this level here, buyers came in and bought up again, bought up. And each time it reached the level of value and rejected down until it went far enough down for it to have more power going back up than it did to push the price away. And then it went through again and again. And this is what happens in a trading range. Price zigzags above and below value because there is no momentum. So, like the spine of a book holds the book together, momentum holds trading together. It gives us a big clue over, what's going to happen in the future. And that's vitally important. And, this river of value that I operate in here it's fundamental, to how buying and selling in the world works. When you see something that is above value, you're going to try and sell it. If the price is above value and people are still buying, then if you're a seller, you probably want to buy. You probably want to sell to people, and that's just how it works. When you're a seller and you've got goods for sale, and prices are above value, then you're going to want to sell to these people. If there's a market for something, and you can make money through selling and buying, then price is going to go up and down. And these are the keys. So look at the size of the red candlesticks in here as it's going down, much bigger than the green candlesticks. And there are times in trading, where you basically can sell any green candlestick, and there are times where you can buy any red candlestick. And you need to learn when these times are. And that's how you make money out of trading. You become familiar with what's happening, and you identify the book, you identify the window, you identify a table by its legs and by the fact that it's got four of them. In most cases, a table would have four, wouldn't it? Four legs and a stable top to it. And that's what a table looks like. Now, this is the equivalent to a table in trading. This is a trading range. And so if you don't trade trading ranges, and they are more difficult to trade than trends, downtrends or uptrends, then you don't trade during trading ranges. So again, here, this was a period of time where the market was in a trading range, and it was followed by a bear breakout. More tricky, more technical trading within here, easier here. So, what do? Do you wait Are you somebody who waits for a trend to develop and then takes advantage? Because there are plenty of opportunities. Wait for a series of bear bars and then apply your strategy. And if you've got a good strategy, then you can make it work for you. And you can only do that if you're disciplined enough to just follow the system that you've learnt. There's no point in learning loads of different systems, because then you won't know what a book looks like. If there are lots of different types of books, you're not going to be able to easily identify the type of book that you're looking at. Fortunately, a book looks like a book. And so that's not a problem. But in trading, that's what you've got to do. Look, the red bars are looking bigger again here than the green bars. Who knows whether that's going to result in, more downtrend or not. At the moment, the price is above the river of value on the longer term time frame. And you can see that, the bars are getting a lot smaller now as time is getting on, because we're getting into the evening here in the UK now. But ultimately, it doesn't matter what time frame you're looking at. This is the 4-hour chart, and you've got an uptrend there, and it's going back price to the EMAs, and it's bouncing from the river, and it's bouncing up until it becomes a trading range, when it starts crossing over. And this is the type of thing that you need to understand. This pattern unravels almost every day. Breakout, trend channel, followed by a trading range. And this is how markets operate. Once you begin to identify what's going on, and often it's worthwhile looking at a high time frame chart to trade lower time frames, because you can identify, oh look, that's in a trading range at the moment, so we can expect it to, be bought at the bottoms here. And you go to your lower time frame chart, and it means you don't get caught out continuing to sell when it's right at its low here. And that's how I look at charts, and that's how I teach people how to trade. If you want to trade well, and you want to learn what a book looks like, what a table looks like, what a window looks like in trading, then my day trading training course and my gold system will be good for you. I'm Anthony Beardsall, and I'm very grateful for you joining me. I hope this has been useful for you, and if you've got any questions, leave them below. Otherwise, I'll see you on the next video. Bye for now.